trucks internationally, specifically internationally, because in international, generally the shipments are consolidated in larger trucks and there are not smaller shipments like the way they are domestically. But the need for logistics is growing more and more because inventory levels are getting higher because the logistic movement internationally is not smooth and things have not improved. We always expected an improvement over the last 24 months, but somehow there is some global problem or the other always since the last 2 years, which has made this movement highly slow and unpredictable, because of which we have to maintain higher inventories. But the purpose of building this logistics facility was not bad. The purpose was that today we are around a 300 crore company, and we just about manage and survive. But if we want to become a 400, 500, 600 crore company, we don't have the infrastructure to do business of those volumes. And we are not spending 300 crores in the logistics facility. We are spending 300 crores in our manufacturing and growth facility, Pashla as it's called. And a sizable portion of the 300 crores, maybe around 55, 60 odd percent, about 170, 180 crores in Amta. The rest is in the newer facilities, 70 to 80 crores in our existing facilities.
Okay, understood. And my next question is regarding our Nurbe acquisition. So, currently, how much revenue do we generate from Europe, and going forward, how much do we envisage to grow this number with the help of Nurbe distribution network?
So Nurbe is approximately a 10 million euro company, and we hope to be able to find a lot of synergies to grow that robustly over the next few years. But as a company, we don't really give our distribution into particular countries in Europe. We don't really disclose that.
Okay, so any ballpark number that we can achieve in going forward through this synergy? So any ballpark number, like can we grow it to 5x, 6x?
No, the endeavor is to grow it to that level, but we will have to wait and watch how our manufacturing synergies and their customer synergies can get together.
Yeah. Okay. Thank you and all the best.
Thank you.
Thank you very much. The next question will be from the line of Ridhima Goyal from Acquaint B Ventures. Please go ahead.
Hi, Rohan. Hi, Santosh. Thank you so much for giving me the opportunity. My question is related to this new acquisition which we have done, that is Nurbe. So I just wanted to understand why there has been, such a drop in the gross margin level also, and what is the scope of improvement in the new acquisition part? Like, can we improve their margins by 1-2%, or it could be higher?
So, for us, the major focus over the next 2 to 3 years is to be able to ensure how we can grow our revenues through Nurbe. While maintaining Nurbe to be profitable, I think being a distributor, having the kind of gross margins they have is quite impressive. At this point of time, I think they've been able to generate those kind of gross margins is because they've been able to build a brand identity for themselves in Europe and not just buy and sell other branded products. So, at this point of time, I'm not very concerned about the Nurbe margins. What we are looking to drive over the next 2 to 3 years is how we can build our European business through Nurbe.
So we are not very much concerned about the margin part. So on a control basis, we can expect these margins.
Yeah, if you look at life science companies, in the plastic segment in Europe, I don't think there'll be a lot of companies at 47-48% gross margins.
And Nurbe is a trader, it's not a manufacturer. So trader always have a margin in between 8 to 12%. So they cannot have the margin like 45-46% like in a manufacturing company.
Understood. So 10 to 12% is what we can expect from the Nurbe one.
Absolutely. And there could be, if we add more value-added products, it could go up. It all depends, it's very difficult to put a number 3 years, 4 years down the line, especially in a geography like Europe, where it's very dynamic at this point of time. A lot of changes, a lot of global upheaval happening all over the place. So it's not very easy to, pinpoint on something so specific over the next 3 to 4 years.
Understood. And also on the standalone part, we have seen a gross margin decline by around like 3%. So what is the reason for that? Are we seeing any pricing pressure on our products in the domestic part or maybe overall part?
See, the market is competitive. There's not really, I would not really go on to say pricing pressure, but the market is competitive. The demands have been low over the last 2 years. The supplies have been high. So of course, people like to push more product, but I won't say pricing pressure per se. There's a change of product mix as well. A lot of high margin products, like the PCRs and the liquid handlings have lower demand in the market. So that brings some of the gross margins down. And then when you start building new products, you have to discount those products for people to try it for the first time, because if you don't have any history or leverage on those products and people don't trust you for those products, or they don't trust your brand for those products, there's always an introductory cost.
But the new product contribution would be less to your overall revenue, so that must not be the major contribution to the decline in the gross.
No, I just listed all the factors for you. It's a mix which brought the 3% down. There's a change in product mix, there's the market scenario and the introduction of new products.
Understood. And one last question I needed to ask was, since we are seeing that the Panchla plant will start contributing from second half of FY25, so when can we see the around 50-60% capacity utilization level from the Panchla plant, or maybe the major contribution to your top line? When will it start? What is the timeline?
So it's all a function of how the market reacts and how quickly we can capture businesses globally and in India. I think global would play a very important role because the Panchla facility is so large with such huge capacities. The global market would have to play a very big role compared to India. But having said that, we could have installed 100% of our capacities over November, December of this year, but due to a major machinery problem in transit, that would be delayed further. So I think over the next 8 to 9 months or maybe 10 months, all our machinery would be installed, but most of our machinery would be installed within the next 5-6 months.
Okay, so we can expect 6 months to 8 months for
for all machine installations. Yeah. So whatever we planned, this capex of 550 odd crores, all that would be delivered and installed.
And the top line contribution will start post that.
Yeah, absolutely.
Okay. Yeah. Thank you so much. That is from my side.
Thank you very much. The next question will be from the line of Ashutosh Parashar from Mirabilis Investment Trust. Please go ahead.
Yeah, hi. Thanks for the opportunity. So Rohan, if I understood correctly, you said earlier that the plastic labware industry in itself would have declined by 30-35% till Q1 in this quarter at least. So if we compare this against the glassware labware industry, so what do you think was the decline there? Because if I see the Borosil's scientific division, they are still reporting double-digit growth. So is it like the glass segment is again taking back market share from the plastic segment, and all? What do you see is the context of the industry right now?
I don't really follow the glass industry very well, but what I understand about the company you're talking about, they've had at least 2 or 3 acquisitions and new entities launched over the last 2 years or 3 years. So I think it's you're looking at it on a consolidated level, but what I hear from distributors around in India, because all distributors are common, they don't only sell plastic, they sell plastic, glass, chemical. I don't see a very strong glass industry in the country, in India at least. Internationally, I don't have much idea.
Okay.
And regarding the decline in the plastic labware industry, what I said was in one of my earlier answers was that if you compare similar companies from Asia having similar product mix as Tarsons and similar revenue basis as Tarsons, their revenue would have declined to the tune of 30-35% from their peak revenue of COVID, which was FY22.
Okay, got it. And on the international piece, you said that you are participating in a lot of RFQs and global tenders. So
right.
Typically, what kind of success rates are we seeing here, and should we expect to see some sort of realization creeping in from the second half this year or maybe next year?
This is how we won our earlier businesses as well. At least in the OEM segment, it's all a function of RFQs. So hopefully, these are long-drawn processes. It's not that I fill an RFQ today, and in 2 weeks, I know whether I'm the winner or not for that RFQ. But hopefully, over quarter 3 and quarter 4, we hope to win more businesses, and that's the only way for us to scale up our international business and be able to utilize more of our upcoming capacities.
So these supplies would not have started yet based on whatever wins we have had in the last, say, 1 or 2 quarters. So these supplies would not have started yet, and they are expected to start maybe from H2 or next year?
Yeah, absolutely. We keep having certain wins here and there, but we're looking to bid for even bigger businesses as we have larger capacities on board over the next 2 quarters, and hopefully we could have some significant turnarounds.
Okay, got it. And just lastly, on Nurbe. So are there any changes that we have done post-acquisition that you could highlight, or we have still kind of let it run as it was being run earlier also? So if you could...
Absolutely let it run how it was. Made no changes in their structure, in their functioning, in their team, and run it as a complete independent entity. But at the same time, working very closely with their team to be able to understand their product mix better, to be able to see what value we can add to their existing product mix, and to devise strategies on how we can leverage all our new product introductions with Nurbe for the European market.
Okay, understand. Got it. Thanks.
Thank you.
Thank you. Ladies and gentlemen, before we take the next question, I would like to remind the participants that in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. The next question will be from the line of Lokesh Reddy from IBM. Please go ahead. Mr. Lokesh, your line is unmuted. You can ask your question. As there is no response from the current participant, we will move to the next question. The next follow-up question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, thank you for the follow-up. So I just wanted to know about the current debt level and what is our average cost of debt.
So the current debt currently is about 270 crore rupees is the current debt, and our average interest rate is coming around at 8.25 or 8.3%, something like that.
So we didn't have any increase in debt from March level, right?
We are taking the additional debt, but we are also repaying that. So on a nutshell, currently our debt is ranging in between 260 to 70 crore rupees, something like that.
Yeah. So what would be the peak debt going forward?
So the peak debt going forward, so far we have forecasted is should not go beyond 300 crore rupees, because we are doing the repayment also.
Okay, understood. And can you also provide the number that you have said that you have an order book? So can you provide a number, any broad guideline toward that number that we have ordered?
So as a company, we don't give any kind of order guidance or any kind of order details, because until unless it's reflected into the sales and we execute, we don't disclose the numbers at a company level.
Okay, understood.
And even if we get the orders, we never disclose details on the type of order, the value of order, who the customer is. We won't do that.
Okay, understood. Thank you for answering the question, and all the best.
Thank you.
Thank you very much. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to the management for closing comments.
I take this opportunity to thank everyone for joining the call. We will keep updating the investor community on regular basis for incremental updates on your company. I hope we have been able to address all your queries. For any further information, kindly get in touch with us or SGA, our investor relation advisors. Thank you once again.
Thank you. On behalf of Ambit Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.